The yield on the 10-year briefly above 4% today. That's a big jump from being under 3.8% just last week. That said, the banks are a relative bright spot. The KBW Bank Index up about 1%. And the big banks start reporting next week with B of A, JP Morgan, Citi, and Wells Fargo all out with earnings on Friday. What should we expect? Let's ask Dick Kovacevich. He's the former chairman and CEO of Wells Fargo. It's good to have you here. Welcome.
Thank you, Kelly.
It seems as though the big guys, for the most part, are holding in there. But what about the smaller banks?
Well, there are some smaller banks that are having difficulties, and I think that will continue. The reason is that they used to have quite a few depositors that were over $250,000 uninsured, and they felt comfortable. The customers felt comfortable with that. That's not the case anymore. No one wants to put more than $250,000 in their small bank, particularly. They're also suffering from the fact that their securities portfolio is underwater because of the increase in interest rates. So they may have to raise more capital in order to offset these issues. Mm-hmm. And quite frankly, some of them may have to sell their bank as a result of this.
Well, and sell their bank, I mean, we've kind of been waiting for a lot more of this activity over the past year. And I've been struck in a number of discussions we've had here about commercial real estate with players who are on the front lines. They keep referencing the fact that the small banks have disappeared from the scene. And you just wonder what that means in terms of their earnings power.
Well, it's going to affect them. I think in the smaller banks area, you do have commercial real estate issues. But in general, these are their loans are to local companies who have not suffered as a result of stay-at-home working. So I think we may not see the same level of commercial real estate issues that larger banks have, where you are in larger areas where people are working more at home.
Yeah. I want to ask you about the big call. I don't know if you saw him this morning, but Mike Mayo was talking about how he thinks shares of Citigroup can triple in the next 3 years, if I'm not mistaken. Do you want to, listen, I don't know if you want to comment about Citi directly, but I'm going to ask you to. What do you make about a call like that?
That's a little more than I would expect, but I do think not only Citi, but all big banks are in a good position. And have very good dividend yields, and I think they have more to run. I think the biggest risk that the big banks have is that the Fed causes them to need much more capital than they need. I don't think the big banks need any more capital than they already have relative to their risk, and so we'll see how all this plays out. But that's, I think, the greatest risk is not the business risk as such. It's the regulatory risk. And I think it's very unfortunate, because I think what's happening is that the Fed is trying to hide the fact that they did not see the risk that almost everybody else saw in spring from the Silicon Valley Bank and Signature and so on. And they're trying to blame that issue on not having enough capital, when in fact it was a mistake by the regulators, a huge mistake that they didn't do their job right.